Good morning. Today is Wednesday, the 6th of November, and we are going to be looking at FX, US equities, the precious metal, and crude oil. Now, as all of you probably know, the US elections occurred yesterday, and we do have a relatively clear winner. And why I say relatively is because it still hasn't been exactly called from the majority of the media outlets, but according to Fox and some other news media outlets, Donald J. Trump is expected to be the 47th president of the United States of America. I'm now looking to the left of my screen. I'm using AP as my source. Donald J. Trump is leading by 267 electoral college votes to Kamala Harris's 224. The states that have yet to be called are Nevada, Arizona, Alaska, Wisconsin, and Michigan, where we still have votes being counted. But if we take the data that we do currently have, Donald J. Trump is leading in all of these battleground states. And as such, with only 3 votes for that 270 electoral college vote victory, Donald Trump appears to be the next president of the United States of America. Now, you have probably seen this on your charts as well. Euro USD. These downwards this downwards motion has occurred since last night when votes were being counted. We are seeing a death cross being formed, easily maintaining a bearish outlook for the euro against the US dollar. Look at that move on the daily chart, that strong bearish candle. Of course, it's the US elections. Of course, there's going to be high volatility. And of course, we're seeing a significant move to the downside with Trump now being expected to be the 47th president of the United States of America. That is due to the fact that his isolationist policies could support the greenback, and thus we're seeing that being reflected in the FX markets. Moreover, if we move on to US equities, you can see them forming new all time highs. That is because the tax cuts and the lower corporate tax could provide support for the US equities markets, and as such, they are moving higher. Let's look at the Dow, all time highs. The Nasdaq, not all time highs, but moving higher. The S&P 500 is at an all time high figure. So we're going to go back to the FX market though. Let's start off with the euro. So the Trump victory is providing support for the US dollar. That means we are maintaining a bearish outlook for the euro against the US dollar, a bullish outlook USD JPY, etc., etc., etc. Now we must note that we do have the Fed's interest rate decision, which is set to occur tomorrow afternoon. The majority of market participants are anticipating the Fed to cut by 25 basis points. Now the issue is that we have seen Trump's economic policies. And I'm going back to the AP website. We're going to be looking at the Senate, in which the Republicans have a majority of 51, so over that 50 threshold. The House appears to be moving in favor of the Republicans. It's 196 to 178 currently. So if we do have a red sweep in this election cycle, Donald J. Trump's economic policies could pass much more easier through the House and the Senate. Now, the issue is Trump's economic policies could inadvertently lead to an increase of inflationary pressures. Therefore, I would not be surprised to see concerns being expressed by Fed policymakers following tomorrow's decision. That in turn could be perceived as relatively hawkish, which could in turn aid the US dollar. However, if they cut rates and make no mention at all, might be perceived as dovish, which in turn could allow for a slight retracement in the Euro USD and in the other FX pairs dominated by the US dollar. Nonetheless, even if there is a retracement by the end of the week, so let's say Thursday during the American session and then perhaps maybe Friday, we are maintaining an overall bearish outlook for the euro against the US dollar. Now, you can clearly see that our support and resistance levels have been invalidated uh, within a single day, and we are on the daily chart. So we do need to readjust. And due to this move, of course, our support and resistance levels are going to be very far away from one another due to the increased volatility that exists in the markets currently. I'll be placing R1 at 1.0930 That would be my R1 on a daily chart. So taking, uh, I wanted to coincide the closing of the bullish candle and the opening of the bearish candle. So 1.0929. Let's keep that as our R1. You can see it met resistance and then moved lower. So that is our R1. Label properties. That is the R1 level. For R2, under normal circumstances, we would have kept it, but following the elections, it is very, very volatile. So we need to readjust that support level as well. I need to bring that higher, coinciding, finding resistance, support, and then broken, turn to resistance. 1.1070 as our R2 resistance line, and then 1.2027 as that R3 level. And then let's change this. 27, 25 if we round it down. So we have R1, R2, and R3. For support, I simply need to clear the chart. So we're going to be taking the wick of this bearish candle. Support, this is RS1, 1.0700, or 1.0700. If you look at FX Street, I had published an article earlier on today, which was the euro against the US dollar. All those resistance, well, those support levels have been broken. So we're moving to the daily for this one here. So this is S1, 1.07. That is a big figure, key psychological level. Now, we should note that there has been an excessive move in the FX market. Just look at this daily chart and then compare it to the from the 5th of April onwards. This is huge. It's incredible. But with such a large move, one could also assume that there might be a retracement within the daily candle. So it depends on which time frame one might be using. The overall direction of the pair does appear to be in a downwards fashion. Look at the RSI, which has crossed below the figure of 50 and is now currently registering a figure of 36, implying a strong bearish market sentiment. Now, the Bollinger Bands are also tilted towards the downside, so the overall primary trend, one could say, is that of a downwards fashion. But if you look at the 4 hour, for example, you can see that it's finding some support at that S1 level, which we just mentioned. So we wouldn't be surprised to see a retracement of the pair to higher ground, perhaps to where these moving averages are currently before continuing on its descent. It's an excessive move. It might seek some liquidity before continuing on its downward trajectory. On the other hand, we do have the 100 moving average crossing above the 50 moving average, which does imply a death cross, which in itself is bearish in nature. And even on the 4 hour candle, you can see that the RSI is at 30, a strong bearish market sentiment, but still would not be surprised to see a slight retracement occurring perhaps later on today. Back to the daily chart, we're going to be continuing by placing our S2 support level. I'm looking towards the left of my screen. You can see upon which price action started moving higher using this wick here. It does appear to be at 1.05982. The issue, once again, is this excessive move today. Note the distance between R1 and R2. So placing that as S2 currently would be a bit too close. Ideally, however, if we see the tomorrow's candle and then Friday's candle as well being smaller in size, so relative to the price action that we've seen over the past few weeks in terms of size, then this would actually and could be a support level. But based on the data that we do have currently, just to be on the safe side, I might have to place that as two level at a lower level to be on the safe side, which I repeated again and again and again. So this was what we were looking at. And then if we look again to the left hand of our screens, you can see a lot of noise. You can see it moving higher, higher highs, higher lows, higher high, and higher low, and then higher high, etc., etc. Now, the reason as to why I've placed it right around here is that I've seen these three particular candles here. I'm going to be zooming in and let's see if we are correct. We can see that this relatively acted as support level, turned resistance, broke, pierced, sort of invalidated it, and then support, support, resistance, support, 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 and then moved higher. So that would be my S2 level on that daily chart. 1.0565, rounding that down. And then, of course, we do need to find our S3 level, which means we need to look even further back in time. 28th of October 2022, too far away from the price action, which means we need something a bit higher. One, uh, second touch confirmed, and then a third. So we had support, support, resistance, support. That's a good S3 level in my view. So I will be using that. And of course, we are placing support and resistance levels. The best thing we can do is simply look at how the market reacts once it reaches those levels so we can gauge if we were correct in our analysis. Now, I'm well aware that using the daily chart is not ideal for day traders. But with such a price action, it is fairly hard to use that 4 hour. A daily chart provides a greater picture. You can see it tested the R1, which we placed today. You can see it move down to S1. So this is our range. High volatility, high moves. And then we also have the Fed. And even further, we are still waiting on the results of the US race for the House of Representatives. We're also just waiting for that to be confirmed for Trump. And then we also have to see who will be leading this Republican government. So Trump is the president, but who will his cabinet be composed of? That is also another question. Depends on their policies, It depends on their agendas as well. So we still have a lot of volatility in the market leading up to next week as well. So we are going to be using that daily. From next week, perhaps we could drop down into a 4 hour, maybe even a 1 hour time frame for that analysis. But using the daily now provides us with a much clearer picture as to what to expect for today and perhaps even for tomorrow. I'm actually editing that S3 level currently 1.0440. That is my S3. Then I need to change this text label again. S2 becomes S3. So that is the euro against the US dollar. But that was for the support. I actually need to fix. No, I've done the resistance levels. So this is euro USD. Now we are moving on to the USD against the JPY. We have our two at 154.80. S1 was at 152.0. I'll be readjusting that S1, bringing it slightly lower at 151.60. We will be using this as our S1, maintaining a bullish outlook for the US dollar against the JPY. So this becomes S2, then S2 becomes S3, and so on and so on. We're going to be keeping, if you've been following along for a month or two now, you'll see that we've been using these support and resistance levels quite often, which is why we've been keeping them, and it essentially makes my job much easier if I already have those support and resistance levels, and we are on that daily time frame as well. So S3 becomes 146.45. Then let's say S4. Why not? So we do have S4. S1, as we said, 151.60. We are also maintaining a bullish outlook for the USD against the JPY. And I think you can guess why. Elections. Dollar is strengthening. Now, the very interesting fact for the BOJ is that they're not on hiking just yet. So if the dollar does strengthen significantly against the JPY and aims for that R3 level of 162.0, I would not be surprised to see an intervention in support of the JPY. So a bit of caution for this particular pair. But nonetheless, for now, it does appear to be moving in upwards fashion. The RSI is at 65, applying a strong bullish market sentiment. Moving average, 50 moving average, bouncing off the mid-range of the Bollinger Bands, looks good. Came back down, tested that was indeed resistance into support. Overall, all in all, it is a bullish outlook for the particular pair. Now, if there is something in particular that you would like to cover. Uh, Now is your chance to ask in the chat. Otherwise, I will be continuing with our usual program of going through USD JPY, cable, the loonie, the Aussie, oil, gold, and then we'll do the S&P 500. We could even do Nvidia, and then we'll probably end off today's session. But if there is something you would like to see, which I'm not going to cover, if you want to ask, now would be the time to do so. So I will have some time to look at the chart, go through some analysis, see what's going on, and place our support and resistance levels. Nonetheless, we are now currently done with the USD JPY. Possible resistance at 154.80. Higher than that is 158.35. And then if we're feeling ambitious, R3 could be at 162.0. For cable GBP USD, that R1 level was slightly nice, but should have been just a bit higher. You can see at 1.3040, it found resistance and then came back down, tested that S1 level, took down below, which means we need to readjust this support level as well. We are maintaining a bearish outlook for cable as well. And you can guess, US elections. Stronger dollar, Trump presidency, bearish for the particular pair. Essentially, today is going to be a repetition of bullish or bearish, and the reasoning is possibly the US elections. Interestingly, though, for cable, we do have the BOE's interest rate decision, which is set to occur tomorrow. If the BOE's decision is dovish in nature, i.e., cuts, or a very dovish sentiment emerging from BOE policymakers, could further weigh on cable, and thus could allow the dollar to strengthen even further, potentially taking aim for that S2 level at 1.2675. Now, in the unlikely event that it does break above R1, the next target could be at R2 at 1.3260, and that is 1.3435. We've placed those support levels as well, and we can move on to the next pair. USD CAD moved lower. Need to readjust that S1 level. 1.3820 as RS1. S2, S3, and the resistance level remained the same. This could be a retracement to gain some support, so some liquidity potentially before moving higher. RSI is at 60. Despite dipping below 70, we are still maintaining a bullish outlook for the particular pair. There are a few issues for the Canadian dollar as well. Now, Trump is famously pro oil and, quote, drill, baby, drill, which means that grants and then land might be more easily obtained, and permits to increase oil production in the US might be fast tracked. Essentially, Trump wants to increase the supply of oil that is being produced. So, an increase in supply could result in a reduction in the crude oil's price. Thus, Canada, which is an oil exporting nation, could see its currency having lower demand, thus could weigh on the Canadian dollar and could allow the US dollar to gain. So we are maintaining a bullish outlook for the USD against the Canadian dollar. For the Aussie, China's trade balance is also jowled, which could influence the Aussie's direction. However, you can see that the dollar is strengthening against the particular pair. The RSI is at 41, which does imply a bearish market sentiment as well. We can keep that R1 level. I'll be readjusting this S1 level just slightly below. I won't be taking the wick in this instance due to the fact that we do have Australia's trade balance and not Canada's, and China's trade balance as well, which could provide some support for the Australian dollar if China's imports are greater and if Australia's exports are increasing. So we are going to be keeping that as one, just slightly lower. Overall, though, one could say we could be maintaining that bearish outlook despite it breaking above that downwards moving trend line. Could be retracement, mid range of the Bollinger Bands, and then could continue moving lower. As we were saying, we do have crude oil. Those support and resistance levels appear to be very nice. We've been using these for about 2 months now. We have R1 at 72.10. Note the bullish candle that ticked up yesterday, validating it once again as a resistance level and is now currently moving lower. The RSI is at 50, which does imply a relatively neutral market sentiment, but with Trump now expected to be the president, and for the reasons I mentioned just before, so an increase in oil supply, we could see oil prices moving in a downwards fashion. So, in terms of technical analysis, we could maintain a sideways bias between S1 and R1. However, from a more macro perspective, we could be bearish for oil prices, assuming that OPEC does not cut supply and the tensions in the Middle East subside in terms of Israel and Iran. Staying on that geopolitical note, Israel and Iran, gold does appear to be moving in a downwards fashion today. Now we are using that daily chart. We have S1 at 2,685, R1 at 2,790. You can see the rest of the support and resistance levels on your screens. What is interesting is that RSI indicator of 56, which does imply a relatively neutral market sentiment. Now, we've been saying that the dollar has been strengthening against its counterparts. So, in theory, if the negative correlation between the dollar and the positive correlation, no, the negative correlation between the dollar and the precious metal. So, when the dollar moves higher, the precious metal could potentially move lower, etc. In theory, the precious metal should be moving lower. Yet, the daily chart, you can see that those Bollinger Bands are still moving in upwards fashion. That upwards moving trend line that we have placed is still valid, but that RSI is at 56. So, using the fundamentals and a bit of technical analysis, I would maintain a sideways bias for the precious metal between S1 and DAR1. Of course, it's about $100 difference. So, it is a substantial amount. Nonetheless, we would be maintaining a relatively sideways bias, but we would like to see the precious metal bouncing off S1, breaking slightly below that upwards moving trend line, or testing R1 and not breaking above once again. Still, we do have geopolitical risks, and that is the Middle East. I won't be focusing on Europe because former President Trump has said that he would end the war in Ukraine within a day if he was elected. Well, let's see how valid that is, but we're only sticking to the Middle East for now. Sideways bias for the precious metal between S1 and R1, breaks above R1, potential target could be R2, which is a hypothetical resistance level. If it breaks below S1, potentially support at $2,600 per troy ounce. Intel pre-market is moving higher, so US stocks are and could be moving higher for the day. Wouldn't be surprised to see Microsoft moving higher for that R1 level of 425.05. You can see that the resistance and support levels that we have placed constantly together are validated time and time again. One could take a screenshot and then could see how the stock's price reacts to these levels that we've placed. Nonetheless, I would be maintaining a bullish outlook for Microsoft from a fundamental point of view. Nvidia might be gaining. ExxonMobil is below that R1 level, could gain, but let's see. FTSE 100 sideways bias. It's been that way for quite some time now. 8,180, 8,330. Tesla might gain. So the support given by Elon Musk to Trump has not gone unnoticed. Now there are some issues based on Trump's economic policies with EVs and then the tariffs on Mexico. So how much Tesla could gain in the long run is very debatable. In the short run, however, the CEO might be getting a position in the government or might be asked to lead a committee of government efficiency, if I'm not mistaken, could provide short term support for Tesla's stock price, potentially break above 271.27, taking aim for R3. From a more macro perspective, I think we would need to see what Trump actually implements into economic policy, and then we can make a more informed decision on the particular stock price's direction. McDonald's dropped down that as one to around 99.55. Might retrace higher. You can use IBM. Hello. LVMH staying above that S1. issues in China. I'm going to be looking at again the AP. So AP has essentially called the Trump presidency 277 electoral college votes for Trump versus Kamala Harris is 224. Essentially, we have the new 47th president of the United States, according to AP as well. And that is for Wisconsin. Donald Trump has won with 49.9% of the vote versus to Kamala Harris's 48.6%, effectively flipping Wisconsin from Democrat to Republican. And he is still leading in Michigan, Arizona, Nevada, and Alaska. So, as we did say, Trump presidency is effectively confirmed as well from AP, alongside other various media outlets. Let's see who else. U.S. elections. Let's see. Um, let's see. Is there anyone else? We are. I would be waiting for Vice President Kamala Harris to concede defeat, perhaps a statement. Continuing, we are going to be looking at the US equities markets. Dow Jones 30, all-time highs. The Nasdaq, then the S&P 500. For the S&P, placing S1 at 5,720. That would be my S1 support level. Let's turn this to green. For S2, 5,575. But then, actually, this should be that S1 level. It's broken the all-time high. So a bit of a correction actually here in our support and resistance levels. This becomes S2, that becomes S3. We can keep those other levels that, and we could use them perhaps in the future if we see a deep dive from the S&P 500. And this becomes S1. And now we're off to the races, essentially trying to find hypothetical resistance levels. Okay. So we need to find the distance between everything now. 6,000. 6,040 or 6,050. Let's use that round number. That is my R1. So that would be my target for the S&P 500. And then 6,200 perhaps. And then 6,350. These are educated guesses. Increments of $150, and we are using the daily chart, which is why it's that big. 6,000 and 6,200. There are two. So we are going to be maintaining a bullish outlook for the S&P 500 as well, Nasdaq, and of course the Dow Jones. Dow has broken above that old R2 level. We had R3 at 44,050. As a reminder, Nvidia is replacing Intel in the Dow Jones Industrial Index, which could provide support for Nvidia as well. But overall, let's see, it's about $100. So let's say that's 4,550. Excuse me, 45,000. 45,000. 45,000 is okay. Nice round figure. And then perhaps we could use 46,000 as a hypothetical resistance level at R3. And then placed R1, R2, and R3. So we are still maintaining a bullish outlook. Overall, it's all being driven from the Trump presidency. There is a bit of an issue, and I'll be saying it today, so that we are a bit ahead. Is a Republican sweep might be beneficial for the U.S. equities markets in the short run, but in the long run, with the policies potentially, engaging in a trade war with China, the EU, and then you want to cut corporation tax, it could lead to higher inflationary pressures, and perhaps we might have a bit of an issue within a year or two when Fed Chair Powell's term is also up, and then it's up to the U.S. president to appoint a new Fed chair. And I wouldn't be surprised to see a Dove being installed in that position. And then by the end of Trump's 4 year term, we might have a bit of an issue with inflation. But that, of course, purely depends on the economic policies, what's going to be implemented, how that actually turns out. A lot of factors that are currently in play. But we are maintaining a bullish outlook for these equities currently. And with that, that does it for today. Thank you very much for tuning in, and I will see all of you tomorrow.
Okay, shall we start? Again, welcome everyone. So today's topic, I'm going to talk about coffee multiple moving average strategies. Okay, just before we start the session, I just want to highlight risk warning over here. Okay, anything in this video is educational in nature. Nothing should be construed as investment or trading advice. If you come to trade, please do your own due diligence for the guide trade. Okay, and maybe disclaimer here. Just mention. Maybe just want to highlight risk warning over here. As we already know, trading, forex, and CFD may carry significant risk to your capital, and it may not suitable for all investors. So please come and join the webinar and learn together. Okay. The speaker today, my name is Peggy. I'm an investment analyst and a prop trader as well. These some of the certificate that have passed all the challenge. If you guys want to know about the prop firm, you may just Google it, all right? So just a quick one. So basically how you get all certificate, which is you need to pass all the challenge. Phase 1, phase 2, which is phase 1, 8% profit target, and phase 2, they have like 5% profit target, and they have like 5% maximum daily drawdown. All right, just quickly like info for all the prop firm. And as you know, today I'm going to cover which is what is the coffee multiple moving average strategy. Okay, how to get the entry and the exit criteria, and how can you improve on it. Okay. So what is a multiple moving average strategy, or maybe short form I just say GMMA for the short form for coffee multiple moving average. Okay, strategy is a trading technique developed by Daily Coffee. It utilizes the multiple moving average to analyze the market and identify trends. The strategy used two groups of moving averages just to represent short-term and long-term market sentiment. Okay, and this is how it look like. Okay, the GMMA. Okay, I'll bring you guys to the maybe the chart later and how we going to implement this indicator. Okay, so actually it consists of two of moving averages for the part 3, 5, 8, 10, 12, and 15. This for the short term. Okay, and those moving averages represent the behavior and sentiment of short-term traders. Okay, so the moving average 3, 5, 8, 10, 12, and 15 day, which is the green color, which is over here. Okay. And for the long term, moving average consists with the path 30, 35, 40, 45, 50, and 60 days. Moving averages represent the behavior and sentiment for the long-term investor, which is the red color, which is this one. Okay. And how we're going to use it in the chart. Okay, so you can use GMMA to identify trend. So basically, when the short-term moving average is above the long-term moving averages, which is when, okay, the green one, which is a short moving average, go above the red color. Actually, there's a long that will be color that will go for wait, okay, that will be identified for the uptrend. So when they close, we will gonna buy over here. So basically for the okay, when the short term moving average is above the long term, which is when green above red, okay, and both group are supplemented with a clear gap. So basically when the green go above the red, and you can see really clear a gap here, is indicated a strong uptrend. You can see that when there's a gap between the green and the red color line, we already know that it's strong uptrend. When the short-term moving averages are below the long-term, which is when green cross below the red color one, and then you can see there is the gap here. Okay, it indicates a strong downtrend basically. Okay, so how are we going to get a entry and exit signals? Okay, for the buy signal is generated by the short-term moving averages close above the long-term moving averages. Okay, for the sell signal is generated when the short-term moving averages close below the long-term moving averages. So basically, this is how I just mentioned. You can see that. Okay, for the enter, okay, this is a buy signal. You can see that when the short term, which is the green color, cross above the long term, which is a red color, we're going to enter over here, and I circle over here meaning that this is acting at the support level, meaning that this is our maybe buy entry. One, the price pullback here is acting at a support. Either you want to get another buy entry over here, buy entry over here, buy entry over here, buy entry over here. Okay, and we're going to exit our buy position, for example, for this pictures when the short term close below the long term, which is green, close below the red color one here. Okay, we will exit the buy position because in this case we're going acting at the resistance level. Okay, when price go above, pull back, it acting at support level. For in this case, it acting at the resistance level. Okay. The setting to use, which is already just mentioned for the short term, we use EMA typically set at 3, 5, 8, 10, 12, and 15 periods, which is like the previous days. Okay, for the short term EMA typically set at 30, 35, 40, 45, 50, and 60. Okay, and you can see that when close above here, we're gonna buy. Okay, and then you hold a position. This is how it look like. Okay. GMA track the two activity of two major group in the market. Okay, for the short term, you see a trader like we are the retail trader. Okay, investors could be like bank or any like swing trader. They like to hold like the position longer. Okay, for the trader, we will track at the like the green color one here. Okay, and okay, for the trader, little trader, we will use the short term, which is 3, 5, 8, 10, 12, and 13 moving averages. Okay, like all we have with trade, for example, we already see that price is go below the GMMA, right? Like go below. It's only acting at the resistance. Either here you short and then you short from this one. Either you close as like you at this level, but in this case, what you can see here is acting the resistance level. This is go up to until the investor or those like bank or institution for the red color one. Okay. By the way, if you have any question, you can let me know as well. For the investor or those like bank or big institution, you can see that they are used longer term, which is they are using 30, 35, 40, 45, 50, and 60 EMA. Okay. Don't worry, after this, we bring you guys to the trading view and we're going to implement this and practice together. Okay. And finding trend. Okay. What you can see here, the trading plan, like I said, there got maybe two type of trader, short term, either swing, day trade, investor. That could be the like could be swing trader or position trader, or those like back intuition. They like to use like the longer EMA right here. And then, oh, how are we going to identify trend? Basically, we already know one price, meaning that the green color one, which is the short term moving averages, close below the red one, which is the long term moving averages, right? You can see the price on downtrend, basically because price falling, pull back to the GMMA, and then revert and then continue to the downtrend. When price go below the GMMA, we know that it's going to from uptrend to downtrend. Okay, when price close above, okay, the GMMA or the long term, which is the green one, short term close above the red one, we know that price changing from downtrend to uptrend. Okay, maybe let me just go one more slide and then we'll show you the opportunity. Okay, well, strong trend trading opportunity. We already said that price direction supported by both short term and long term. Okay, this is just the same one. Let me just show you in the chart over here. Okay, let's just go over to the trading wheel. Okay. Okay, in the trading wheel, you just go to indicator here. Okay, you just go to GMMA, which is short firm. I pick the first one, okay, you can see that a lot of traders are using this one, like 4,900, like user here. Okay, you can just go and implement, just click, it will look like this. I use default setting, which is just the same in the slide. I just like over here, these are the short term and the red one for the long term. Okay, and the number of the setting is the same over here, which is 3, 5, 8, 10, 12, 15, 30, 15 for the short term. And for the long term, they're using 30, 35, 40, 45, 50, and 60 period. Okay, and how are you going to use this, which I just mentioned. Okay, you see very clearly that one, okay, short term, I will just mention one green, okay, is a short term close above the red one, which is a long term GMMA, which is over here, right? We're gonna buy, you're gonna buy one price close above. Yeah, we buy here, right? And you can see that price go and this one pull back to the short term, which is acting in the support level, and again it pull back to long term here. Okay, and then this is a strong uptrend. Why strong uptrend? Because you can see that one both short term and long term, okay, they like separated and have a gap. This is really strong uptrend. You can see that this is really strong uptrend. Okay, and we enter the buy position here, and we're going to exit when the price, when like the red one, the green one like cross below. Now it's gonna crossing. So basically we see like that. Okay. Because now we in head 4 time frame, right? Over here, we know that there may be a divergence here. Okay. You can see that we're going to exit when price, starting like cross below here. And of course, now price already break below this support level. If you know how to look at the support resistance, it used to be our support, now is become our resistance level. So either you exit when you see the price, it seem like make a price action here or make a divergence here, or seem like the short-term moving average just like like cross below here. Either you exit here or you exit at this level, meaning that if you have the entry seen from like this entry, we're gonna buy up and you exit at this level. We go for the long position here. Okay, and we target and we exit at this like level because price is falling and the similar close, we put there, and we going to put the Excel here. You can see that the RR, risk and reward, is almost like 4. I mean, let's just say 4, or maybe like more than 3, 1 to 3. Okay, so you can use this for like swing. If you're a swing trader, you can use GMMA for identify trend. And now we are gonna short. Okay, I already short the GBP because price already break below my kind of support level here. Okay, this is very strong. And there is a divergence here versus the I side. It is I side here. You can see that. Okay. Price make high indicator is make a lower high. So there's a divergence here. Either you use this one, you hold your buy position until you see kind of like the divergence here, bearish divergence, or you see the price action and then you exit your buy position and then you sell. Okay. And this is an example in head 4. What about even if we're going to use GMMA on gold, okay, USD. Okay, you can see that. And another one, when the price is sideways or ranging, okay, what you can see now, one price is ranging here. You can see that the GMMA is kind of like where is my, okay, it's like they look like narrow here, right? You can see that it's crossed the candle here, and then you can see that the line is just close to each other here. So in the price ranging, you can see that's right. And we already monitor that. Okay, it seems like here you want to trade, definitely we know that this is our support level. Either you buy here already, and then you can see that you buy here and then see the price kind of like cross above, the green one cross above the red one, which is a short term cross above the long term. Okay, we might have another buy order over here and then you hold. Okay, and you hold, even though let's say you hold here, you buy here, pull back here now, it acting at the support level. In this case, like you can see here, like you can see the rejection here, right? These are acting at the support level. And it go to here, the long-term one, and then after they bounce off and continue to go uptrend until here. If you know how to look at candle, look at the candle, you know that this is like the rejection over here, and then to me, when I want to exit, I don't have to wait until like short-term close below the red one, because you may only can form like you earn a lot, become you earn later, little, because over here you can see that at this candle the close with the bearish engulfing candle. In this case, able to hold my buy position, I'm using the trailing stop loss, up to here. And price is for close with bearish engulfing, which a lot of rejection over here. So meaning that to me, I will exit my buy position because price reach changing momentum from uptrend to downtrend. And what you can see here, one price close with bearish engulfing candle, and this one it can about this kind of about up here. Okay, from here they go back to where, and then end up with another price action over here, and then you can sell. Okay, either here pull back here you sell. Why we sell here? Because you can go to the H1. In H1 price is closing with price action. We will just zoom to see this is our price action, and over here is, I don't know whether you guys joined my webinar yesterday. Yesterday, I think we shot GBP and we shot GBP, right? Again, you can see that this is our, either you call supply zone or you identify your bearish order block, same meaning. Bearish order block, you can see price falling and bounce off from the support level here, and then we gonna short at this candle because in H1 price go to like bearish order block, and we have price action here. Okay, from buy position here we close and then we sell. Okay, you can see that now the short term is close below the long term moving averages, which is green, close below red color, and they really strong downtrend because what you can see here, there is a gap between short term and a long term, right? And then you hold until where you just hold. Okay, if you don't know where close, like where to close profit, either you close at a support level, or you can close when the green, something like that, the green close above the red one, meaning end of the downtrend. Okay, and then you close. But now you can either you short from here, you can use the trailing stop loss, like maybe you you like your stop loss, and then you use like a move every like 10 pip. Okay, to lock in your profit, for example, move until here. Let's say maybe here price bounce from this level and hit your stop loss here, meaning that we still earn a big money from this area to this stop loss here. There quite a few bit from there. Okay, so this is how we trade with GMMA. So GMMA, if you are a swing trader, I think you can use this indicator. Okay. Okay, let's just go back to our chart here. Our thing. Okay, let's just cover easy identification of overall trend. We know the price go below the GMMA is on downtrend. Price go above is on uptrend. Okay, and identification on the overall trend. They say this is a reversal. So pull back here. Okay, reverse here and then continue, and now ranging or consolidation here, because you can see the price is the GMA is just close or just sideways on the candle here. Okay, price action, how to implement and read it, I already tell you guys. Okay, the degree of separation strong, uptrend, really strong downtrend, because there is a gap or the big gap between short term and the long term moving averages. Okay, narrow separation or crossover trend is weak. You can see that, or wider separation is a really strong uptrend or downtrend. Okay, crossover is a bullish. We're gonna buy here. When close below is a bearish, we're gonna short from the level. We buy here, exit here, and then we short. Okay, which is just now I just show you guys. Okay, heavily intersection, lack of price trend, meaning just a sideways. Even it's sideways like that, either you buy, we buy here. Okay, price go to kind of this level. This is kind of identify resistance level. Okay, and then you can see the price kind of like ranging. From ranging here, either you close your buy position and then we're gonna short from this level, because strong uptrend consolidation or sideways and then continue to fall, right? And then you can see that the green cross below, and then there's a gap here. Okay, we know that we're going to hold our sell position until here price kind of like, you know, go above here. Either you exit here, or you can see that there's a rejection here, and then there's a price action. You choose exit your sell position. Okay, from here, either or maybe of this kind of boom here. Okay, and we put our sell here. If for like, you know, if you not close your sell position here, if from this one you might just earn a few dollar or few like dollar here. So just use your tailing stop loss when we use GMMA, or then you can lock in some profit. Okay, this is a long example of buy position. This is the bullish here. We buy here, we hold, and then we exit over here. Okay, you can either exit here as well, but to me, our exit when the price is already has bearish engulfing, and then you can see the consecutive red candle here. So you should already know that we should exit the buy position. For the short example here, bearish. Okay, the green one short term close below the red one with the long term moving averages, and then you can see that there is a big gap here, pretty strong downtrend. Okay, we short and hold. Back here, pull back. Either you have another short position and then you hold, and either here, okay, I will exit my short position because it seems like they're going to like go above the red one. Okay, but then after they continue to go downtrend, either we exit here and either here, or you have another sell order here, because it seems like this resistance level and price action here. Okay, and then continue to downtrend. All right. Okay, this is a breakout from consolidation. Okay, when the line that the separate, that mean here we already know, I just mentioned it, very strong downtrend because there is a gap or subluation here. Okay, boom. Long-term pullback, I just mentioned this how actually, so this how the trader use the this indicator. Okay, you can bookmark, but I think it's a good for the swing trader. Okay, you can see they're really strong downtrend. Definitely you're gonna hold gold, right? Because you have to look at dollar. Let's just look at dollar as well. You can see that it's really strong uptrend as well here now, right? When they close at this one, they are just sideways here. Suddenly they break because of this candle, and then the green one, they close above the long-term moving averages, and then you're gonna buy right from this level, and then you're gonna hold until when? Hold until the green one close below. Okay, this is a head one time frame. What you can see here, look at the candle. This is a sideways or ranging or consolidation somewhere around here. Okay, over here, and the green one, which is the green color here, close below the long term, which is the red one, and then you're gonna hold your short position here and then continue here. We might, some of you guys might want to exit, like you see that, okay, should I, let's say one price go like that, okay, you either some of you guys don't know to trade just based on GMMA, you might exit the short position, but you might think that, okay, seems like price is going to change from uptrend or downtrend to uptrend. But you to trade with other like technique, which is in this case, I identify this my kind of like resistance level, and then I make kind of like pull back. You see, okay, it seems like price already almost like overbought, right? And then you hold, and then you can see that I have a lot of rejection over here, and then either you short here, you short there, and then see the ranging here, you have another short position, another one, and then you can see the price close below, and then you hold until exit here because strong downtrend, and then after that is suddenly sideways. Okay, whenever you see that the candle or the price sideways, should exit either buy or sell position. Okay, no need to hold until like the green one close above or close below the red one, because okay, you might from your, for example, like from you earn $100, it might become like $50. Okay. These are the dollar. What about its work in gold? Gold is very strong. You can see that gold in H1, this how in H4. I think in H1 you will see very clearly that from where starting to sideways at this level, right? Somewhere here, and then you can see that the line, they like close to each other, and after that they kind of like go close above, which is somewhere here, right? And then you buy because you know that is our support level. A lot of rejection, price just sideways, continue to break here, like break this level, right? Like break here, okay, and then continue. You buy here, price pull back, you can have another buy. Either here you buy because oh here we buy because this is our support level. It just pull back to your support level here, right? And then after that you buy and then you hold, and then after that you can see that the line, the color, the red line, they're starting to kind of go far away from each other. You can see that the degree of the supplation here, and then you can really know that this is very, very strong uptrend, right? You can see the uptrend pull back at, they are acting as support level, support level, support level, and they are really have a big gap here. Okay, now they are pull back once. Okay, you can see that very strong uptrend up to here should exit the buy position here, barely engulfing, closing already. There might be a divergence here. Okay, and then you should sell. Okay, for gold. This is very nice trade setup for gold. Okay, and falling. You to ask me gold. I'm kind of like waiting to. I already shot gold and close already. Okay, like just now price kind of pull back here a little bit as like support level. It's only going to break here. So the target for gold, I'm looking around this level, which is the support level here for gold. I'm gonna, which is 2004, slightly 2004 to 23.95. They're gonna be my first support. Either you're gonna buy from that. Um, there are 50% here. So basically, I'm gonna buy gold around this level. I buy because I buy again the trend. I did not follow the trend because it seemed like now selling gold already. So you're gonna buy here at about 23, 23.95 to 24,000. Okay, I will just buy here, and then my TP take profit is gonna be somewhere for scalping, or this is gonna be like TP1, meaning that if I'm gonna buy at 23.95 or 24,000 here, at least 100 pip or 200 pip, or at least for scalping 50 pip to 100 pip, you should close, or you telling stop off for gold, right? Because from here, I think there might be a people want to sell from that level. Target 2004. That for gold for the first support. Second support is gonna identify at this level. This is my second support, meaning that falling another almost 200 pip or 300 pip falling from first to second support. That will be 50 to 50 and 61.8% fib level. Okay, you can see that falling very nicely in gold, right? Very strong. This H4, okay, this will have a gap here, really strong downtrend, and then we gonna wait for the price to come to our support, and we gonna buy from that level, which is the buy zone. Okay, you need to set your stop loss as well, because you probably really have really fall all the way to second support. Just put your stop loss. Okay, you just consider, okay, if you want to buy this level to buy, but if you where is the, do I delete it? What did I do? Okay. Okay, this is the buy entries you consider. Okay, but if you don't not confident, just trade, maybe just try the strategy, buy from here, put 0.01 at least, right? And try to trade on the real account, not the demo, because if you trade a demo, there is no emotion. Okay, at least you trade a real money, you can use like the iCent, or you can use like a dollar account, and then just put like 0.01. At least the real money, you will have the emotion involved. Because if you trade demo, you put 100 lot, you put like 1,000 lot, you earn 1 million, 2 million in a demo, you don't feel anything because there is no emotion involved. But if you trade with your own money, real money, and then you will, there will be emotion, you will feel, they will feel like how the trading, real trading work. So this is a buy entry for gold. Okay, still falling at least here. At least 2004, they're gonna be my first entry, and the next instead they're gonna be 23.95. So between this one, I'm gonna kind of layer, meaning that I will have like small lot size here. Okay, I don't put like 10 lot or like 5 lot at like 24,000 here. I will just have like smaller lot here for gold. Okay, do you have any questions so far? I'll pause here for a while. Let me know if you have any question. Okay, that's all for the GMMA. Let we just package it together. Okay, for this your USD, it is a picture that I took from here. Okay, here. Enter here, so you can enter here, enter here. I think I enter H1, which is here. Okay, you should enter from here or here, and then you can say close, and then you continue to buy, and then we exit when close over, which is the green close below. So shall we should we buy or sell the EURUSD based on H4 time frame? Okay, the target for EURUSD, which I'm looking at for the first support, are gonna be somewhere around this level. Okay, that will be let me just remove the what I wrote just now. You can use Fibonacci, okay, and then we can use the extension. Today is a Friday already, so you already won some money today. I usually don't trade during the New York section. Okay, because my time zone, I'm based in Singapore. When the New York section is about 8:30 p.m. Okay, so by 8:30 p.m. usually I don't trade if I already hit my target for the day. Okay, so for the first support, I will identify here. So meaning I target at least over 4 to this level. Okay, or this is my like you know my kind of like intermediate resistance, meaning that if price break here, I'm gonna pull back, am I gonna short from that level? And again, you can use correlation to trade as well. So your USD is a negative correlation with DXY. This is either I identify my first support or sorry, let me see. I pick this gonna be my first support. This is my intermediate support. Let me see how many pip from this one to this one. 15 pip for scalping. I'll just put no man, just put at second support here. Extension, just remove it. Meaning that if price break here, okay, the target which is at the first support here, and then the second support gonna be there. Let's just we use the okay, we have 38.2% fib level on second support. Now let's say if you identify your first support here, if we want to buy now, can we buy now based on what we can see? It seems like we can buy. Okay, we can buy EURUSD now. But again, if you buy and then you need to know where you're going to put the stop loss, okay? Because this is really strong. The reason I want to buy here, see, I haven't clicked, I want to see first, okay? Like this one, I might identify my kind of like support. It seems like break below here, and then I identify, okay, this is another kind of like support level, but it seems like there is a wick and the body somewhere around here, meaning that I'm gonna buy now, and the price, my stop loss, I'm gonna put just slightly below this wick, because I'm not gonna put the first support here, because it hit my stop loss, my neck plan. I will see if price come to my first support here, which I identify here, and then I see the confirmation. I'm gonna have another buy entry right there. But if you have really big account, and then you either you buy now, you can put your stop loss below your first support, up to you. Because you know our lot size and account size is different, so you need to manage your lot size as well. It seems like this is my buy zone. But let me see, this my M15, the rejection. What about M5? Okay, I'm gonna buy. I'm not gonna ask you to buy. This is your own risk. Okay, if you want to buy, it up to you. I'm gonna buy EU. Okay, I just click buy EU, so you may consider. Just this is my buy zone. So when come to the zone, I just buy. Okay, if you want to follow, you want to try, you just put 0.01. That's all. Okay, because sometimes if you know how to identify the level, key level, and then price come to the zone, and you know sometimes you dare not to like enter or like have the order here. Okay, but I already put one. I will see that better. About for me, I already put my set my stop loss as well, just slightly below this week. Okay, let's just see. Okay. Maybe look at dollar. Dollar still can. Okay, for key level for the dollar. Okay, they are very strong. This this one could be the first resistance here. If they can break above this one, the next target that would be this first resistance. I think the second resistance are gonna be somewhere here, which we just use. Now in this case, right, you can see that now this strong downtrend, and they are acting at the resistance level. Let's just say whether price can fall. from this level, meaning that if dollar is falling, EU GU gold will be rising. Okay, now it's approaching the resistance level, then EU somehow is at my support level. Okay, I will see whether they can bounce from this level. It's a H4. And GU still follow for GU, GBUSD, I'm not gonna buy now because that is not the level that I'm looking for. For the GBP, I will wait somewhere how is this level. If the price come, and then I might consider to buy. Okay. Because looking for sell GBUSD. Okay. This is how it look like in M5. I think I should be positive already. Let's just see, okay, whether it go out here. For scalping, you just maybe aim for 10, 15 pip, 20 pip for USD, and you may close the entry. And it's very nice. Okay, if you enter together with me, we already positive for the EURUSD. Okay, I'm already positive. So okay, the first when I enter, I just put my SL stop loss, but I did not put my TP. Because TP, I always put the last one, always put stop loss first. Okay, just go to another pair. For the USD we already buy, like this is our buy zone, right? Price already rising and already hit the TP, which is the TP or take profit is at this level. It already TP and then falling. Meaning you ask me whether we're gonna shop from this level. No, because that is my, even though I identify my TP there, but the level that I'm looking for for sale, okay, that would be around this level. Because there is a very imbalance over here. There is a fair value gap somewhere around here. There will be slightly go below this. Either you sell at the 61.8% fib level, meaning that you're gonna short from this level. We should see the confirmation somewhere around this level. It's gonna be my second resistance here. let's say you're gonna short here. I'm not gonna hold until here, okay? My TP, this is to be my first support for my TP1 or my first support here. And my second support I'll put at the multi-swing low here. Okay, I think price still can pull back more. Pull back more is oversold. It seems like the MACD is already closed, and then you can see the green one. So at least target somewhere here. Okay, we will see for the USD shaft. It's not the level for to to sell yet. Okay, USD shaft break everything. Okay, what you can see, let's say we short here for the GMMA based on indicator, we short because the green cross below, right? You can see that this very strong downtrend because there's a big gap here, right? And now price come to this one, we should exit the sale position and then we should buy. That should have divergence as well. There's no divergence, but over here, oversold, right? Yeah, oversold. Close above, the green one go above already. The histogram here, that's why we buy. And then the candle also close with the bear bullish engulfing candle as well. Should exit the sale and then you buy for the USD session. Again, USD JPY we buy, but we buy which you should close at the resistance level. Okay, because for all momentum it is still on downtrend for USD JPY. Okay, the level here, this is my resistance level. We short here, I think I get 20 pip. I already closed. Okay, so if you were to ask me, I'm gonna sell again or no, because even though it's still falling all the way there or below, but it's okay because we can earn every day. Okay, you just set your target. You want to earn like how much you want per day, or this pair you set for 15 pip or 20 pip, and then it TP, and then you just close your computer and we can do other thing, okay? Because trading is just a part of your life, right? It's not everything. So we also have other things to do. Um, but some people they have a mindset like if they earn 1,000 and then they think that okay, I think we should earn more. Maybe like should today I want to 2,000, or you want like 3,000, but actually your target is like 1,000 per day. And then what if like today is not your day? Instead of you already earn 1K and then you giddy, you want another 1K, but you lose. Okay, you lose your profit and then you also lose your capital. So just set the target, or you can have like multiple account, meaning that like at least 2 to 3 account. And maybe I will share with you guys. You should have like 2 to 3 account, one for swing, one for scalping, and one for new trading. Okay, let's say this account already hit the target. Then if you still want to trade, you should trade another account. Okay, this is my first resistance here, and my support right here. Second support. You can see that it's acting at the resistance level. Okay, that would be 61.8%. So this is the level, but I'm not gonna short here because let me just see. Because I already happy with today. These are the key level. Okay, you may consider you want to short. Because I already have, just now I opened the buy position here for the USD with you guys just now. I still hold, and then it's green. Okay. If you're happy with the scalping, you may just close. Okay, but I still hold a little bit more, and then I might close as well because after this I got going home, so already happy with the profit. Or you're gonna buy here, but of course this is gonna be my resistance level, meaning that if you're gonna hold is your TP at your first resistance, meaning that for me I'm gonna short. Okay, if price go there, go all the way here, like go all the way here, I'm gonna short. Okay. All right, guys. Do you have any questions so far? Where is the... Okay, I'm going along the poll. Can you guys help me vote? Okay, to improve our webinars. Okay, and I will see you guys again. Me and my team will see you guys again, I think next week, because we will see you guys every Wednesday and Thursday. Okay, it's in the poll. Okay, guys. So that's all for today, guys. Thank you so much for your time. See you guys again in the next webinars. Just take care and have a good weekend. All right. Bye, guys.